Today's crypto market is not dramatic. There are no explosive rallies. There are no panic crashes. But markets rarely reveal their most important moments through noise. They reveal them through silence. Right now, crypto is in a phase that feels uneventful on the surface, yet extremely active underneath. Prices appear .com, but positioning is quietly changing. Bitcoin is holding its structure. It is not breaking down, and it is not chasing higher levels. This matters more than most people realize. In financial markets, holding steady during uncertainty is often a sign of strength, not weakness. This phase represents absorption. The market is absorbing macroeconomic pressure, interest rate expectations, regulatory developments, and institutional behavior, slowly and deliberately. Retail traders often expect instant reactions. They look for immediate confirmation. But smart money does not operate that way. Institutional capital moves before confirmation, not after it. Today, crypto is behaving less like a speculative playground and more like a developing financial system. Volatility has compressed, momentum has slowed. Sentiment is divided. These conditions are uncomfortable, especially for short-term traders. But discomfort is often where long-term opportunity begins. Crypto markets move in cycles. Expansion is always preceded by compression. Right now, we are clearly in a compression phase. Compression drains attention. It creates boredom. It pushes impatient participants out of the market. And that is exactly how markets reset. One of the most important signals today is emotional neutrality. There is no extreme fear. There is no extreme greed. This balance tells us the market is waiting, and when markets wait for too long, they rarely move slowly afterward. Institutional players understand this environment well. They're not looking for excitement. They're looking for inefficiency. Inefficiency appears when price stops, reflecting underlying development. Behind the scenes, crypto infrastructure continues to grow. Network upgrades continue. Adoption does not stop just because price pauses. Short-term price action often disconnects from long-term fundamentals. But history shows that reconnection is always aggressive. Liquidity conditions remain tight globally. Capital is selective. Risk assets are being evaluated carefully. This environment forces crypto to mature. Speculation fades. Structure becomes dominant. Narratives lose power. Data gains importance. This is not a market for emotional decisions. It is a market for reality. Opportunity is created when prices stop moving and attention disappears. This is those who wait for certainty usually arrive late. Those who wait now, certainty is absent. As long as Bitcoin holds its structure, the broader market remains in preparation mode. Altcoins are weak, and that is normal. Broad strength never begins with altcoins. It begins with stability. This phase will not announce its end. It will end quietly. Then, surprise everyone. Crypto is not failing. It is not dying. It is As this phase continues to unfold, one thing becomes increasingly clear. The crypto market is no longer reacting emotionally. It is reacting structurally. This distinction is critical. Emotional markets move fast and reverse violently. Structural markets move slowly, then expand with force. Right now, crypto is behaving like a structural market. Institutional participants are not chasing headlines. They are watching liquidity, volatility, and positioning. And what they see is a market preparing, not collapsing. Bitcoin's price action is narrow, but its significance is large. Compressed volatility tells us that pressure is building. Markets cannot remain compressed forever. They expand. And when they expand after long compression, the move is rarely small. Another key signal comes from derivatives markets. Funding rates remain neutral. Open interest is stable. This tells us leverage is controlled. When leverage is excessive, markets crash easily. When leverage is controlled, markets move with intention. This balance is rare. It suggests participants are cautious, hedged, and uncertain. And uncertainty is fuel. Retail traders often misinterpret uncertainty as weakness. But professional traders understand that uncertainty is where asymmetric opportunity forms. As price moves sideways, something else is happening. Ownership is changing. Weak hands lose patience. Strong hands gain exposure. This transfer never makes headlines. It only becomes obvious after price moves. On-chain behavior supports this view. Long-term holders are not distributing aggressively. They're holding, adjusting, and rotating. Rotation is strategic behavior. It suggests preparation, not fear. At the same time, global macro conditions continue to apply pressure. Interest rates remain restrictive. Liquidity is selective. But markets do not need perfect conditions to move. They only need conditions to stop deteriorating. Uncertainty, while still present, is becoming clearer in certain regions. Clarity does not need to be positive. It just needs to exist. Markets fear uncertainty more than rules. Infrastructure development continues quietly. Layer upgrades, scaling solutions, and institutional tools are still being built. These developments rarely impact price immediately, but they shape long-term direction. Crypto does not move because of one event. It moves because of accumulated pressure. That pressure is forming now. Another misconception is that bull markets begin with excitement. They do not. They begin with disbelief. They begin when participation is low, narratives are weak, and confidence is fragile. That is exactly the environment we are seeing today. Attention has faded. Volume has cooled. Social interest has declined. This is not bearish. It is constructive. Markets need participants to disengage before they can surprise them. Bitcoin remains the reference point. As long as it maintains structure, the market remains in a state of controlled tension. Altcoins lag because they always lag during preparation phases. They do not lead. Leadership comes later. As we move toward the final stage of this market phase, one reality becomes unavoidable. Crypto is not waiting for permission to move. It is waiting for imbalance. Markets do not change direction because of opinions. They change because conditions quietly shift beneath the surface. Right now, those conditions are aligning. Liquidity remains thin. Volatility remains compressed. Participation remains cautious. This combination is unstable. Markets can tolerate fear. They can tolerate excitement. What they cannot tolerate for long is compression. Compression always resolves. And when it does, the move feels sudden, even though it was built slowly. Many participants believe the next major move will be obvious before it happens. History shows the opposite. The biggest moves begin when conviction is lowest and attention is minimal. That is where we are now. Crypto cycles do not reward those who react fast. They reward those who understand structure earliest. Structure today tells us this market is not exhausted. It is restrained. There is a difference. Exhausted markets break down. Restrained markets explode. Bitcoin continues to serve as the signal. As long as it maintains its framework, the broader market remains coiled. Altcoins remain suppressed, not because they are irrelevant, but because leadership always comes later. First comes stability, then direction, then expansion. This order never changes. Macro pressure still exists, but markets do not need easing to move. They need conditions to stop worsening. Stabilization is enough. At the same time, adoption continues quietly. Infrastructure improves quietly. Institutional tools expand quietly. None of this is exciting in the moment, but it is decisive over time. Crypto has always moved against majority emotion. When excitement dominates, risk increases. When doubt dominates, opportunity forms. Today, doubt is louder than excitement. That matters. The next major phase will not begin with celebration. It will begin with confusion. People will ask, why is it moving? Only later will narratives appear to explain it. By then, positioning will already be complete. This is why timing is less important than understanding phases. Crypto does not reward prediction. It rewards preparation. Preparation does not mean constant action. It means awareness, patience, and discipline. This phase is filtering participants. Those seeking fast confirmation will leave. Those seeking long-term asymmetry will stay. And that is how markets reset. The calm you see today is not comfort. It is tension, and tension always resolves. When it does, the market will not pause to explain itself. It will simply move. And those who understood this phase will not be surprised. They will be ready.